All right, we are live. It's a beautiful Friday at noon in southern Alberta. The sun is shining and we're drying up after a bunch of rain this week. I'm Everett Dirksen. With me is Bryan Mahachik. We are partners at EJD Mahachik, a CPA firm that specializes in auto repair shops. And so we're in part 2 of our series on 6 financial mistakes your shop is making right now, mistakes that are costing you money, and that we want to help you get back, right? So Bryan, those 2 questions are, we're going to talk about being an entrepreneur today.
Right.
And we're going to talk about cash flow,
Yep.
which is probably my favorite of all the topics we're discussing. But tell me a little bit about Money Wrench. What's it about? What are you up to?
Yeah, so Money Wrench is our tailored accounting services platform for Canadian auto shop owners and auto shops. And we do 3 things really well. It's understanding where your cash has gone and how to get more of it back.
Yep.
We help you minimize your taxes and plan for the future. And we help you understand your financial statements and see how you compare against other Canadian shop owners. So we do a lot more than that, of course, but those are our 3 things that we like to think that we do really well.
Still do taxes?
Yeah, you bet. We still do taxes, and we do. We'll help owners with a lot of things, but those are the big 3 that we focus on in terms of how do we explain what Money Wrench is.
Yeah. Awesome. Well, thanks for sitting with me again.
Yep.
Let's get after it.
You bet. So, Everett, in terms of just one of the questions we're going to talk about today is you don't treat your shop or you don't treat yourself like a real entrepreneur. So what are we talking about there in a nutshell?
Yeah, I love this question. I used to think that being an entrepreneur just meant I went out and started a business, right? And I think a lot of shop owners in particular, they get in a spot where they've been turning wrenches for years and then all of a sudden get a chance to buy into the shop, or maybe have gone and purchased one, or got it from their dad or mom or whatever it is.
Yeah, it's
right?
commonplace. Right?
Pretty common. Or we see it a lot. And so I just think that was enough. And as I became more familiar with what it means to be an entrepreneur, especially as a shop owner, you start to understand some new things like, do you want to be growing your business as an entrepreneur? Are you trying to get bigger? Do you got one bay and you're happy with one bay forever? Mm-hmm. That's not really entrepreneurial spirit. That's more of I've got this thing, I'm going to do this. I'm a mechanic that's just going to have a shop. When we look at entrepreneurs, we're looking at shop owners that are maybe trying to grow, add a bay here and there. Maybe it means you need to move to a new location, all those different things. And it almost boils down to a risk idea, right? Are you willing to take a risk on your business?
Right, exactly.
So one of the key things that tells us often is if somebody's an entrepreneur is whether they're looking at their financial statements.
Yeah. So how often, if I'm a shop owner here, I'm asking you how often should I be looking at my financials?
Yeah. Well,
once a year when I come in to see you for my year-end meeting and check up in my tax return.
Well, that's what we see in 95% of the time, especially when clients come over to us. They're accustomed to this. I talk to my accountant once a year when he files my tax return.
Right.
Now, you don't have to talk to us all the time, but if you're an entrepreneur and want to have a pulse on your business, probably every month, right? And so I know in the program you run and with the shop owners, you're looking at their numbers every month.
Yeah, that's what we want to be for sure.
Because that way okay, this month is just over. I'm looking at it. I can see where the problems are before I wait a whole year to figure out. Right. Oh, I had a problem last June.
Yeah.
I wish somebody had told me about that at the time.
Yeah, exactly.
Right? Yeah.
So if I'm a shop owner here, how should I be paying myself? I'm probably doing a lot. I might be I might be diagnosing. I might be in the office paying bills. I might be, underneath the hood, twisting wrenches. I could be doing a lot of things. How should I be paying myself?
Yeah, that's a really good question, and it's pretty complex sometimes, but it doesn't have to be just mentally when you think about it. So, we see a lot of financial statements where. And we wrote a couple articles about this not that long ago and had some publications about different owners taking a dividend, maybe a salary.
Yeah.
And we really don't care. We want it to be specific to their situation. But the important part about it is in an entrepreneurial setting that the owner can see the cost of themselves in their business, right? If I'm half the time in the shop, I need to be able to reflect that cost to my shop half the time. If I'm the other time in the office doing paperwork that I hate, I got to reflect that half as an administrative charge. So when we look at financials, we actually break those things apart. We say, hey, shop owner, how often are you here versus there? And that'll let us know where to get you out of, right? Maybe I'm terrible in the office, right? But I'm costing myself 50 grand a year by sitting in there punching in bills. Well, I can think of what better ways for you to spend that 50 grand than yourself sitting at an office. You could be out making more money, selling, fixing stuff if you want to. Likely you're a good mechanic when you're at that stage. So there's lots of different ways, but you got to be able to identify it.
Right. Yeah. So we talked about reviewing your financials. Yeah. But in there, like, what are some things that I should be looking for? I mean, I'm not an accountant, so I some of this stuff and these numbers and the terms I might not fully understand. But what would be some things that I would just want to be maybe looking for if I was just pulling my numbers and reviewing them on an evening?
Yeah, it's a good place to start, especially if you're entrepreneurial, to just pick a couple. Right? Don't go and try to understand the whole system and all the complexities. You'll get there, right? And you're going to talk about it a bit. And I know you do it where you're trying to educate and grow a shop owner's knowledge base. We're going to focus on a couple of key metrics now. We're going to move you into some more complicated ones as you're ready for it and as your shop is ready for it. So we look at margin a lot with any business we do. We want to know what your margins are on different product lines, different service areas. We want to look at, how many work orders are you doing in your shop? We want to look at what the average value of those are. What's your revenue per bay? We want to look at cash flow, which you're going to talk about in a bit here today. We want to look at the P&L, like all your operating costs, to see where we can pare down, to see where we can get more efficiency. So some key things like that. And the most important part of that, I think, Brian, is not that you look at all of them, it's that you pick some and actually focus on them, right? And as you see them month after month after month, all of a sudden that predictability is there. You're like, okay, I know that this number should be this because I've seen it the last 5 months in a row.
Yeah, right? There's that saying out there, what gets measured gets managed, right?
That's totally right.
So if I've picked a few things to measure over, say, the next 12 months, and I key in on those, I would start to see some uptick in those numbers if I'm diligent and wanting to grow them. Yeah. So on the revenue side, and a lot of shops might have them. Maybe the owner is the one doing up doing the service writer job. But if I got a service writer in place. Right. Anything there that I should maybe be just in general kind of watching in terms of what they're up to?
Yeah, as a shop grows, service writer is a pretty key component of your cost, right? And a lot of guys a lot of people are hesitant to do it, to get one. And finding a good one's tough, right? I think we know that to get the right one in place, because they've got to be able to do some diagnosis a little bit. They've got to be good with people. They've got to understand your technology and your software, and they've got to be willing to want to perform, right? And actually want to help your shop perform, because that's really their job. The technicians are in the garage fixing stuff, making you money by their production work. The service writer's there scheduling, organizing all that stuff. Got to be nice to the grumpy customer, right?
Well,
it's a totally different skill set.
It's really almost a sales function, really, is what it is. It's if you're thinking about it in a growing type situation, you need that service advisor there who's selling the services and things that you can do for a client.
And lots of times customers don't really know what they need, right? They think they do. I want this, or I want this to happen, but the mechanics, they're the professionals, right? They're there, and they got to be trustworthy, but they're going to be the ones to say, hey, look, this is how we take care of you, is by letting you know what's up. And that service writer role, super critical. And so as an entrepreneur, you're going to want to evaluate that person, make sure they're the right person. And we've seen service writers have to leave and replaced because they're not performing those roles the right way.
Right.
But you got to know the cost of it as well, right? And so you can build all sorts of things like incentives and a model where they get paid bonuses and paid different things like that. And I know you can help guys with that if they have those questions, but that's pretty critical. Most of it is, and I'll maybe sum up the entrepreneur side with saying, a good service writer, understanding your financials, looking at stuff regularly, that helps you to not lose money, right? We see, and that's our topic today, is cash. And I think where the entrepreneur is looking is they're saying, why am I losing money? Where is it, and where am I losing profit? Could I get more out of this? Could I get more out of that?
Yeah.
And so I know, sometimes we think this is evil to talk about profit and things like that. But if you're an entrepreneur and you're a business person, you need to make money. You got to pay yourself. You've got a family to pay, or to keep, take care of. You're part of a community, and you have relationships, and you can donate that way. Like, there's so many legacy things that really come when you analyze, am I an entrepreneur? Because if I am, I got to be concerned with profit, and that includes my financials. I got to be concerned with cash. Right. Yeah. Awesome. Okay. So that wraps up entrepreneurialism. It's a tough word to say. I can't say it 15 times. Let's move on to question 2, which is kind of the key of today's topic, is understanding cash flow. Yeah. So somebody asked us, hey, why is it important for me to understand cash flow in my business?
Well, at the end of the day, if you don't have positive cash flow, your business isn't going to last. Effectively, if I sum that up, as simply as I can, that's really what it is. You can only last so long without generating positive cash flow. At the end of the day, so
love it.
Yeah.
No, that's good. They say cash is king.
Yeah. From a purely tax point of view, there can be situations where holding too much cash can cause you grief. I mean, we deal with a lot. We farming in southern Alberta here. There's situations in the farming where excess surplus cash can be a bad thing from a tax point of view. I think most of us would rather have cash than debt. Yeah, certainly I don't want to be funding my business with debt. I want to be cash, rich, if you will. But like having cash is a great thing. Right. But if I'm sitting on cash and I've got a lot just sitting in the bank, that can, I'm probably missing opportunities as well that I could be doing if I got a bunch of surplus cash that's just in the bank. A lot of us probably like to feel good about having a bank account and a nice bank balance, but we're missing opportunities if we just are sitting on a bucket of cash as well too. Yeah.
No, that makes sense. And how many guys have you talked to, or how many groups and owners have you talked to that have that? Because it can be a lucrative industry to be in. Right. They've got it. That cash is sitting there, and they just don't know what to do.
Yeah, it depends. I guess it's the situation. I mean, there's some clients that deal with, and they struggle with cash and generating cash, which is indicative of different issues maybe going on underneath. But we also have the clients that are cash rich and might just need help and guidance into how to utilize it better. Yeah. And there could be reasons why they're holding on to it. Maybe they want to expand and be able to do a building in a couple of years type thing. But certainly if we start seeing a buildup of cash, one of the conversations we're going to have is okay, let's put this to work.
Yeah. Oh, I love that sentiment. That's really great. So part of being an entrepreneur is, what's your plan? Right? Yeah. Do you have a plan for a bunch of years? And often the ones who don't have a plan don't know what to do with that cash.
Well, and we're talking about forward thinking versus the historical model of, I bring my books into my accountant and they're anywhere from 12 to 18 months old.
Yeah, that's right.
Like we're now talking about projecting forward, like, hey, what are we going to start doing with these cash balances that we're generating and whatnot.
Okay, so tell me, we're talking about understanding cash flow. Tell me what is in the financial package, or what are the bits there that will help shop owner really grasp what's going on from a cash flow?
Well, from a fundamental perspective, the financial statements are made up of 3 items. The balance sheet, which is really that picture, the camera, take the snapshot. Today, July 3rd, I take a snapshot of my business. What do my assets, what do my liabilities look like? The profit and loss, or the income statement, is really a period, 6 months, typically a year,
Right.
of how did I do profit wise.
Yeah.
Now, generally speaking, we're talking accrual basis financial statements, right? Most of the time,
Yeah.
95% of the time, we're building our financial statements on the accrual basis. Accounts receivables, accounts payables, which are non-cash items until they're actually paid or received. So those are hitting your revenue and expenses, but they're not really cash until they're either out or in your bank.
Yeah.
So there's a third component of the financials, the cash flow statement.
Yeah.
And what
sounds like it's important.
Yeah, it really reconciles the balance sheet and the income statement.
Yeah.
And the interesting thing here is that in the accounting world, we a lot of the clients that we deal with have what a need for a notice to reader or a compilation engagement, and that isn't necessarily governed under the accounting rules and guidelines, if you will.
Yeah.
I mean, they're produced to be accurate, and,
Sure.
and they're just not false or misleading at a massive level. But if I need to move up because the bank is requiring my financials to be looked at by a reputable accountant, it's going to be called a review. And maybe if I got massive amounts of debt, I'm a big business, I might even need an audited financial statement. So a review and an audit require certain disclosures and whatnot under the accounting rules, which would require the cash flow statement.
Yeah. So a cash flow statement is important.
It's part of, and it's part of the it's part of the financial statement package. But in the notice to reader compilation setting, we see a lot of times it's not even in there. So you get your balance sheet, you get your profit and loss, but you're missing the third one, which ties the two together, and which is a lot of times really what I care about, my cash. Like, did I make money or not? Well, income statement says I made money, but why don't I have it, right?
I mean, I've heard that before. It says, I've got all this profit showing. Where did it go?
You're right. Exactly.
And the cash flow statement tells me that.
Yeah, it helps you. It's certainly like there's components to it, and you need to. It can get a little bit complicated, certainly, but that's where we come in. Yeah. We help you understand that, take that cash flow statement, reconcile your accrual basis earnings to your cash position, and work that through and help you understand where those items are going, where the ins and outs are going, so that you truly do understand, hey, things that might hit the, I book a receivable for a job I did. I mean, in a shop situation, don't typically carry a lot of receivables, but let's book it on the other side, on the payable. I got a big payable that might hit my expenses, and it comes out of my bottom line profit on an accrual basis, but I haven't relayed the cash out yet or paid it. So maybe my cash shows a big number on my balance sheet, but really on a net basis, it should come out, right? Yeah. So there's lots of things that are inside that cash flow statement. And that's really what we want to work with shop owners to truly understand and reconcile in their minds how to understand what is happening in their business from a cash perspective.
Okay, awesome. Having some trouble right now with my camera. Looks like to me, my computer says I'm having trouble playing this video. Oh. So that's great. You just can't see us right now, but we'll just wrap up pretty quickly. I like that explanation, Bryan, using that as a tool and you helping shop owners understand where's cash going, where's it come from, how much is going to be there in the future, right? That's a super critical part of it.
Right, exactly. And it's a situation where it is an area where we've got to work with a lot of shop owners to help, and like you said earlier, as the relationship grows, we get deeper into more complex things, and it'll certainly come along. So what we gauge your knowledge base and work with you to help build that up.
No, that's awesome. I'm just going to put a note on here. We're having trouble with video. No problem. Okay, awesome. Well, let's wrap up. If somebody needs help, are you willing to have a conversation about cash flow and give a couple pointers on understanding? If somebody wants to call you?
We always are. I mean, we're here to help. We want to work with shop owners because it's what we understand. We understand their businesses and their industry. We think better than really anybody in Canada.
Yeah.
I mean, so we want to. We're always open for that phone call. So you can reach us at our number 403-405-0034. That is our phone number here in Coaldale.
All right.
Moneywrench.ca is our website. You can connect on email. Connect@moneywrench.ca. Email me directly, Bryan@ejdworks.ca.
Okay, awesome. And you've got some cool tools up there on the website for them to check into. Shop comparison tool, a couple different things like that. All your pricing, all your stuff is up on that site. And you've done a good job there of being really transparent with what's going on in this business.
That's what we want to be at the end of the day, is transparent and upfront with people.
Okay, cool. I really appreciate it, Bryan. We've covered two things today. Don't treat your shop, or why you don't treat your shop like a real entrepreneur.
Yeah.
And we've talked about why no one is teaching you to understand cash flow. It's likely because you're not working with the right people.
Yeah, possibly.
So awesome. We're going to leave today. We'll be back next Friday for number 3 in our video series, or in our live series, about 6 financial mistakes your shop is making right now.
Yeah.
And look forward to seeing you then.
You bet.
Awesome. Okay, thanks.
Take care, everyone.